Hey everyone, welcome back to Inkmattic. This is episode 93 and we're going to be talking about Evergrande. It has made headlines over the last couple of weeks. Is it too big to fail? So let's take a quick look at this BBC article. So Evergrande is China's largest real estate developer. It currently boasts that it has 1,300 projects in more than 280 cities across China. And the thing is, with these projects, they're not just the one-off buildings. They're usually like 13, 14 high-rise apartment buildings with a gated community. So these are massive projects. Evergrande's business also ranges into wealth management, making electric cars, food and drink manufacturing, and it even owns the country's biggest football teams. So with this company, they have expanded aggressively to become one of China's biggest companies by borrowing more than $300 billion. And like I said, the amount borrowed is almost the size of Disney's market cap, which is currently at $318 billion. So that is a lot of money when you do compare it with a massive company like Disney. So last year, Beijing did bring in new rules to control the amount owed by big real estate developers. And however, this has had a negative impact or accelerated their downfall, as they are struggling to stay afloat by selling properties at a discount to maintain their cash flow. So this company is struggling to even meet interest payments on its debts. It has struck a deal with a domestic bond of $35.9 million. However, it still has another payment of $83.5 million on an offshore bond. So yeah, it is definitely in trouble. And I personally do think this is definitely going to send shockwaves across the Chinese economy, because this is a huge amount, a huge company. And to be fair, like all these people that have invested in buying a property from Evergrande have put their life savings in, and you know it's definitely going to bring some uproar in the Chinese economy or as a country for the government to take action. And you know, if they don't take action, you know, I think the government's going to be in trouble. With that being said, like if this company does end up collapsing, it is definitely going to be sending shockwaves throughout the economy, as it currently owes 171 domestic banks and 121 other financial firms. So that's pretty much where they've got their money from. You know, that is a large number of creditors to be owing money, and 171 domestic banks, that's a lot. And the thing is, like, if they do collapse, these creditors are not going to get their money, and they are going to find it a lot harder to lend money out to other businesses. And this is effectively is going to cause a credit crunch, because businesses need to borrow money to grow their business or improve their cash flow. So with banks not lending to other businesses, you are going to see other businesses collapse or find it very difficult to grow their business and potentially hurt the economy even further. I'd love to know what you guys think about this situation, and to what extent do you think this is going to impact the Western economies such as the UK market or the US market. It's definitely an interesting one and something to watch out for, because I do think it's definitely going to have an impact overall in our markets, but to what extent is the question. If you found this useful, hit the like button and help this video get out to more people. So what is also interesting as well, like Evergrande isn't the only company that's in trouble and in crisis mode. So according to NTD News, that there is 3 other companies with similar levels of debt. So Vanke at $235 billion in debt, Country Garden at $272 billion, and Greenland Group at $190 billion. So if all 3 of these if all 3 of these collapse, then I don't really know how bad this is going to impact the Chinese market, because that is a lot of companies to go bust, especially in the housing development sector. And yeah, it's definitely going to send shockwaves throughout the global economy, in my opinion, if it does happen. Okay, so now let's take a look at the portfolio. Right now, it's currently at $18,000 and £5.02p. I've invested £14,044.24p. Returns at the moment is just under 4,000 at £3,960. That's around 28.2% in the green. So if we do look at the week at the start, we were at 28.14% in the green, and then we did hit lows of around 24.97% during the week on the Monday, the 20th of September. With that being said, we did hit highs of around 29.88%, and yeah, it is going back down again. But yeah, we did see a huge drop down here from Monday to Wednesday, where it started to pick up a little bit. And I do believe this is probably when the Evergrande news did start to take some impact on my portfolio and started affecting the overall stock prices. But yeah, okay, so now let's take a look at some of these stocks. So I want to talk about Alibaba itself. It's down to $145 at the moment. It has had a pretty sketchy month, to be honest. It is down around 15.49%. I've got a total of 4.3 shares and I'm down 29.98%. And yeah, I really don't like Chinese stocks at the moment, but I know there is a lot of risk to them right now, and I'm kind of taking a lot of risk with Alibaba, more than I usually like. I do think, for me personally, I really do like Alibaba. In my opinion, I think they're a great company, and they are doing really well. It's kind of like the Chinese Amazon, but they also have like a wholesale kind of side, which is actually called Alibaba. But they also have like a consumer side, like if you want any cheap crap from China, then you have AliExpress. But I do like the way that a lot of people are kind of like drop shipping and ordering through Alibaba. And with that being said, I do think Alibaba can still grow domestically and internationally. However, there is a lot of politics going on with China, and it is definitely a very risky stock in my opinion. I'm not going to be selling this at any time soon. It's going to be a long-term play for me. I'm hoping it doesn't get delisted, because that would definitely be Trading 212 will definitely be selling this as it's in my ISA and it becomes non-compliant. But anyway, with that being said, I am going to be holding on to Alibaba for the long run. I do think as a company, they are actually pretty good. However, there is a lot of risk with it, which is more than I would like, but I'm in it, and yeah, I'm not going to be selling at a 29.98% loss. You are having a laugh. That's just my opinion. Again, I do think it is a lot of risk. Moving on to American Express, has been doing pretty well this month. It is up 8.99%. I've only got one share in this at the moment, and I am up 70.01%. That's £52.81p in the green, which I think is actually really good for American Express. I really like them as a company, as a person that uses a credit card. I don't have an American Express right now, but I will early next year. But I do think I really like an American Express card just because of the rewards you get, etc. But I do think as the landscape is changing, it is slightly worrying me with the legacy credit cards, such as MasterCard, Visa, and American Express. These are all kind of starting to worry me, like in the back of my mind. And the reason why I say this is because when you look at like your phone now, you either have a Google phone or an iPhone, and which makes it really interesting because these two platforms are slowly getting rid of your wallet. So for example, I do keep a credit card in my wallet, but I also keep my driver's license. But there are rumors that Apple are going to be adding ID to your iPhone as well, so essentially making your wallet redundant. And I would find it interesting if Apple does end up becoming a payment processor as well, effectively eliminating legacy payment processors like American Express, Visa and MasterCard. So yeah, it's a tricky one. It's definitely sparked some interest in terms of thought that I'm starting to think about. Is there a company that's going to be purely digital and maybe compete with these? Like, is Google or Apple going to start moving into the whole payment processing? Because I know with Apple, they have launched an Apple credit card in the US, but when they do expand it to other markets, do you think that they're going to end up making their own alternative to the legacy payment providers or payment processors? I'm not really sure which is the right word, but I hope you know what I mean. Moving on to Apple as well. It's $146. It's been a pretty bad week. Let's go to the week view. It's up. It's basically broken even at 0.6% in the green. But the funny thing is, like, for Apple size, that's actually a lot of money when you do think of it in terms of growth. So I've got 10.5 shares at the moment, and I'm up 16.38% overall. So I'm pretty happy with where this is going. Moving on to, so Microsoft has is kind of an interesting one. They did release their new Surface lineup. I'm a little bit disappointed that they did discontinue the Surface Book, but then there's the Surface Studio, which I did like the option, you know, where you could disconnect the hardware and just use it as a screen. But obviously, maybe the sales wasn't as good as they expected. So hopefully, the Surface Studio does see better performance. But one thing that I am finding maybe Microsoft is missing is their own chipset, their system on a chip. Because Apple has got that, and they've done tremendously well. I personally hate MacBooks. But I am very, very tempted in getting one of those M1 chips just because I had a negative experience with the whole MacBooks in the past. And I do think, you know, the M1 MacBooks, the performance you get from video editing, rendering, is phenomenal from what I've seen and read on the internet. Like, even a MacBook Air packs quite a punch. And I'm not 100% convinced with Microsoft, especially when it comes to Intel. And the worst thing is, they've only gone with Intel. When you look at AMD's Ryzen lineup, apparently outperform the Intel chips from both performance and heat-wise, like in terms of the amount of heat it generates. So it's kind of an interesting one. I don't expect much to happen with the Microsoft announcements or with the new Surface lineup. In my opinion, I think there was nothing exciting in my opinion in terms of a laptop, but you know, let's find out how the share price kind of reacts to it like in the coming weeks. So with Vici Properties, I have increased my position. I've got a total of 19.75 shares in Vici Properties. I'm down at £9.99. That's 2.28% in the red, and my average price is at $30.59. This did go X on the 23rd of September, so I should be expecting a dividend payment shortly, just under $7. So minus the withholding tax, probably like $5.80 or something around there. But yeah, again, I'm looking to expand my position in Vici Properties as well. So, you know, we'll see how this goes. I do want to get to around 20 shares soon, so hopefully I can get that, and we'll see how that performs. I have been slowly reducing my positions in this portfolio and condensing them down and getting rid of a few. So over the last few weeks, I've got rid of Uber and I've got rid of BP as well. So with that being said, that is it for this video. Hope you enjoyed it. Let me know in the comments down below what you guys want to see next. And don't forget to check out Inkmattic.com and smash that like button for the YouTube algorithm. See you in the next one.